Hello and welcome to the Business of Blockchain. I'm Nisa Amoyals. Today we're talking about Bitcoin-denominated life insurance with someone who purchased it for himself and then got a job with the insurer. Joining me is Jason Leibowitz, Head of Business Development at Meanwhile. Thank you so much for being here.
Great to be here on the New York Stock Exchange. Very cool.
So tell us, what is Bitcoin-denominated life insurance and why did you want it for yourself?
So Bitcoin-denominated life insurance, it sounds like a mouthful. It's a lot to unpack. But when I first understood what it was, my jaw quite literally hit the floor. I'm an early Bitcoin adopter. I first got into Bitcoin in 2013. I also have a wife and 2 young kids at home. And Bitcoin-denominated life insurance solves a lot of problems for me. Namely, my Bitcoin will outlive me. Plus, everything in life insurance is tax-free, so you get all these tax advantages for your Bitcoin. So our company, Meanwhile, is a life insurance carrier. We're domiciled in Bermuda, like so many other insurance companies in the world. And we're really not that different from most of the other insurers. I mean, Northwestern Mutual is one of our big investors. The only difference I would say between us and most other life insurance carriers, in fact, all other life insurance carriers, is that we're on the Bitcoin standard.
And what is that?
Bitcoin is our functional currency. Bitcoin's our unit of account. Our audited financials are external. They're on our website. And everything we do is in Bitcoin. And what that means for a policyholder is that you're going to have a life insurance policy where you're going to pay your premiums not in dollars, but in Bitcoin. Your death benefit will be paid out in Bitcoin. And it's whole life, not term life. So there is an investment component that you can get policy loans from, which are also in Bitcoin, but at a new stepped up cost basis. And that's where the tax advantages of life insurance come into play.
And what is the origin story? How did this come to be?
So we were founded in 2022. Our CEO and co-founder, Zach Townsend, he's married with 2 young kids as well. And he was pricing up different life insurance, legacy life insurance policies, and realized they're so expensive. And while these tax advantages are great, the problem with legacy life insurance is that it's all denominated in fiat currency, that the dollar is a problem. And why is that? Because there's a lot of inflation. Things are getting more and more expensive. And so he realized that he has to pay a lot of money for life insurance, and the amount of money that he would leave to his family in a tragic, unfortunate event at some point in the future would be in a fixed dollar amount that might sound attractive today, but 20, 30, 40, 50 years in the future, that same amount is not as attractive then. He was a Bitcoin bull, still is, very much so, and he realized that wouldn't it be great if you could get life insurance for Bitcoin or Bitcoin-denominated life insurance. And so he had this brilliant idea. He wrote a memo. That memo turned into some seed funding from Northwestern Mutual, from Sam Altman, from Google's Gradient Ventures and others in the Silicon Valley. That's where he's located in the Bay Area. And that was the birth of Meanwhile. And here we are, some years later, as the only life insurance carrier on the planet that is fully denominated in Bitcoin.
Talk to us about the mechanics of how you get this to work.
Yeah, I guess it starts with how does life insurance work and why are there these tax advantages? So life insurance, you get assets that grow tax-free, you can borrow money from it tax-free, you get this death benefit that's tax-free. Why are there all these tax advantages? Well, the Western governments of the world, they want every one of their citizens who can afford it to get life insurance. It protects them. It protects their families, creates less dependency on the government, less welfare, less handouts. And so the incentives that the governments use to try to incentivize everyone to purchase life insurance are everything's tax-free. With traditional life insurance, you typically go to a life insurance carrier and you ask for coverage. You say, I'd like a $1 million policy, whole life policy on my life. And they'll say, great. They'll crunch some numbers based on your age and health and sex, whether you're a smoker and other factors. And they'll dictate to you an amount of premium that you have to pay in dollars every month or every year. And of course, there's baked in fees and expenses in that premium payment. And in whole life, as opposed to term life, in whole life, those dollars go into a mutual fund or an investment account that grows tax-free. And that investment account typically has a guaranteed growth rate of about 4% or so. So every year, your dollars and premium are going into this account that grows 4%. And that growth is tax-free, meaning in the future, you can borrow money from your life insurance policy, and that loan will not incur any capital gains or income tax. So let's say 20 years in the future, that investment account is up 30%, and you want some cash, maybe a down payment on a home. You can borrow up to a certain percentage of the surrender value of your policy and not have to pay the capital gains on, let's say, that 30% depreciation. And think about any other account or investment that you might have in your life that's up 30%, you want some cash from it, you're pretty much always going to pay capital gains or some sort of tax on that performance, on that growth, but not in life insurance. That $100,000, let's say you borrow, you don't have to repay that loan either, which is really fascinating and compelling because it just nets out of the death benefit. You had $1 million policy, you borrow 100K, your new death benefit's $900,000. You can use that 100,000 tax-free however you want. Now in life insurance, we had to change a few things around, namely because Bitcoin is our currency, and Bitcoin, unlike dollars, is a scarce asset with finite supply. So you can't come to Meanwhile and ask for a death benefit policy, a policy of $1 million or 10 Bitcoin, because what that would require us to do is tell you how much premium you have to pay in Bitcoin. And in our company, everything's in Bitcoin, the premiums, the policy loans, and the death benefit. So for us to tell you how much Bitcoin and premium you would have to pay for a policy means that we have to know how much Bitcoin you have, but we don't because it's a scarce asset. And so instead of asking for coverage, you come to us, come to Meanwhile, with an amount of Bitcoin that you know you have, that you want to use as premium. And you say, what do I get with this? And we will then crunch numbers based on your age, health, sex, smoking status, and give you a death benefit ratio in Bitcoin that you get relative to the amount of premium you want to pay. Premiums with us are always paid over 10 years. It's what's called a 10 pay. And the premiums are paid in equal annual installments in Bitcoin, regardless of the price of Bitcoin.
Okay.
Because when Bitcoin is your functional currency, when you're on the Bitcoin standard like we are, one Bitcoin always equals one Bitcoin.
Right.
Whether Bitcoin's trading at $100, $1,000, or $1 million, one Bitcoin still equals one Bitcoin. And so your premiums are in Bitcoin, your death benefit's a guaranteed fixed number of Bitcoin, regardless of the price of Bitcoin at any point in the future. And so at this point, Nisa, we sort of have to start thinking in Bitcoin.
Right.
Stop thinking in dollars.
So talk to me about the 2% compounding. Where does that come from?
Yeah, so just like a traditional life insurance policy has a guaranteed growth rate of 4%, our guaranteed growth rate is 2% in Bitcoin denominated terms. 2% is actually the minimum threshold that a life insurance company must grow their balance sheet, their policies by, in order to qualify as life insurance. We chose 2% as the number that we would guarantee to all of our policyholders because it's a number that we can achieve, it's sustainable, and in life insurance, X amount of premium pays out a death benefit that's greater than X. So, example, a 35-year-old healthy male who wants to pay 10 Bitcoin in premium pays about 18 or so in death benefit. So how does 10 Bitcoin become 18 Bitcoin? Where's the extra 8 come from? Where's the 80% return on your Bitcoin over the course of your life come from? Well, it comes from the fact that we're growing your policy by 2% per year in Bitcoin terms every year. So the yield is a very interesting part of what makes us life insurance and what makes us unique. It scares people to think, I'm going to give you my Bitcoin and you're going to get yield. Are you going to lose my Bitcoin? Well, we're not, and I'm going to tell you why. Because the way we get yield has no counterparty risk, has no credit risk, and it always stays at the custodian. Our custodians are Anchorage Digital and Coinbase, two of the best custodians on the planet. They're cybersecurity companies, they're trust companies, federally chartered trust companies by the OCC, meaning that all assets in custody are bankruptcy remote. And so the Bitcoin's always going to stay there. It's not going to be lent out to shady counterparties. We solve a problem for low-cost basis Bitcoiners. If you think about Bitcoins history and where we are today, it's been a kind of a meteoric rise from zero to nearly $100,000. And so there's a lot of captive low-cost basis Bitcoin out there, meaning people that have Bitcoin, they've had it for a long time, they might want some cash or they might want to diversify, but they're scared of incurring a taxable event, paying a massive capital gains tax. I bought my Bitcoin at $330 in 2013. Selling Bitcoin at $100,000, I mean, that's basically all gain.
Right.
And so there's a lot of people like that and a lot of companies like that. Meanwhile is unique being a life insurance company in the crypto industry because our assets are so long dated. We have 20-year-olds that have policies with us. They're probably not going to die for 60 or 70 years. And that means that we are duration seeking. We want to take long-term loans. And one such loan is a 1-year repo that can be rolled to 5 years that we do with Bitcoin miners that allows them to swap their low-cost basis Bitcoin for high-cost basis Bitcoin. So the way it works is this. You're a miner. You have 100 low-cost basis Bitcoin you never want to sell. You don't want to incur a taxable event. You lend it to Meanwhile. We'll lend you back 100 Bitcoin. In the form of a 1-year repo, that 100 Bitcoin we send you back, it assumes today's cost basis. We charge 3.5% interest rate. So mechanically, you send us 100 Bitcoin, we send back the miner 96.5 Bitcoin. They can immediately sell it at today's market price for no taxable event and use it for all their CapEx needs. At the end of the year, they can either repay back the loan or they can just roll to the next year for another 3.5%. It's all in Bitcoin denominated terms. So from the miner's perspective, they just freed up their low-cost basis Bitcoin for CapEx. From our perspective at Meanwhile, we are getting 3.5% interest rate, 3.5% yield, of which we pass on 2% to all of our policyholders, and we have no counterparty or credit risk because this is a fully collateralized loan. If our counterparty disappears or goes bankrupt or doesn't pay back the loan, it doesn't matter to us because we have all 100 Bitcoin of theirs in this example, and they only have 96.5 of ours.
Okay.
So that's how we get yield. And the Bitcoin always stays at the custodian at Coinbase or
And
at
you do
Anchorage.
this with all the miners?
We do this with any counterparty, anyone who has low-cost basis Bitcoin,
Okay.
whether you're a miner or not.
And are there any risks we should be aware of in this setup?
The only risks are to Meanwhile as the life insurance company and our custodians, Coinbase and Anchorage. So from our perspective as a life insurance company, we're Bermuda-based. We're regulated by the Bermuda Monetary Authority where we have our licenses. And we're regulated the same exact way as every other life insurance carrier in Bermuda. Bermuda is one of the premier hubs of all life insurance for good reason, because the BMA is one of the most credible regulators of the life insurance industry on the planet. They keep a strict capital reserve ratio that we must maintain of at least 150%. Today, we're close to 400% assets relative to liabilities. We're backed by some of the biggest names in the world, Northwestern Mutual, Bain, Apollo, Pantera, Han, the list goes on. And then your only other risk is custody risk. Coinbase, Anchorage Digital, two best custodians on the planet from a cybersecurity perspective. So to understand really like everything I've just said and kind of recap it, the reason I got my own policy before I even joined the company, you get yield, 2% yield in Bitcoin denominated terms, which by the way, if the dollar price of Bitcoin goes up, then that 2% yield is amplified by potentially orders of magnitude in dollar terms. So you get yield, you get tax-free policy loans. So the last thing I should say to that is the fact that just like in traditional life insurance where you can borrow from your policy and not pay gains on that tax, on that appreciation, Bitcoin, let's say it goes to $1 million one day and you want some cash. Well, if you have a policy with us, instead of selling Bitcoin at $1 million and paying a big capital gains tax, you originate a policy loan. You can borrow up to 90% of the surrender value, and you're going to get Bitcoin, not dollars. And so we'll send you Bitcoin, and now what do? Well, you go to an exchange or a broker that you have a relationship with, and you say, hey, I want to sell some Bitcoin. They're going to say, hold on, where did this Bitcoin come from, and what's the cost basis? Well, it comes from my regulated life insurance policy at Meanwhile, and I have a loan document here. It says the cost basis is established on the day I originate the loan. In this case, $1 million a coin. You sell that same day, cost basis equals your sale price. There's no taxable event because when the cost basis and sale price are equal, there's no gain, there's no loss. You can keep all the cash when you sell your Bitcoin because in life insurance, you don't have to repay the loan. And importantly, you're not borrowing dollars against Bitcoin, you're borrowing Bitcoin against Bitcoin. So there's no risk of a margin call or a liquidation event. If the price of Bitcoin crashes, it doesn't matter because one Bitcoin equals one Bitcoin. And you're really borrowing from yourself or your loved ones, your beneficiaries. You're not borrowing from a life insurance company or an exchange or a broker or a lending desk. And so in life insurance, you can borrow from your policy. You can sell your Bitcoin at a higher cost basis. You get the stepped up cost basis. And you can keep all the cash and never have to repay the loan. It's this pretty clever, incredible way to monetize your Bitcoin without paying taxes in the form of life insurance. And finally, it is life insurance, so there is a death benefit component.
Right.
So you have to leave a legacy to your family. So you name your beneficiaries, and when the insured does pass away, they get Bitcoin at a new stepped up cost basis as well.
So the long-term vision of Meanwhile, I mean, you want to get people thinking in Bitcoin terms, right? But what else? What's the grand vision of the company?
We want to be one of the biggest life insurance companies on the planet. It doesn't just stop in whole life insurance. It transforms the entire industry of life insurance. Annuities are a really interesting example. You have a multi-billion-dollar annuity business in America and across the world. We will be launching a Bitcoin-denominated annuity that you can roll from a traditional annuity into a Bitcoin-denominated annuity to get Bitcoin exposure for that class of people who want to create some sort of pension payment for themselves in Bitcoin terms instead of inflating fiat currencies. Mm-hmm. And so there's so much to the life insurance industry that Bitcoin denomination can transform. So our vision is to be one of the biggest life insurance companies on the planet on the Bitcoin standard.
Well, we certainly look forward to watching your success, and thank you so much for being here today.
Yeah, it was great. Thanks for having me.
And that's it for today's edition of the Business of Blockchain. I'm Nisa Amoyles at the New York Stock Exchange.